Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Well, welcome back, Art Jarvis. It's good to have you with us. Taking Stock, episode 31.
Fantastic to be here. How are you doing?
I'm good.
Good.
I'm good. It's been a good couple of weeks.
Yeah.
Although it got really hot again, so we're going to deal with hot weather. But other than that, it's good.
Yeah. Well, welcome to Cincinnati.
Thank you. Well, and to you, it's like, again, you sneaked in a little trip in the last couple of weeks.
Yeah.
And I know you said, welcome to Cincinnati, and you were like, I think I'd rather stay where we were.
Let's put it this way. Where I was about 55 or 60 degrees, so we were up about 40 degrees from where I was. So, but hey, it's good to be home, and it's back to work.
Well, we are in the air-conditioned comfort of the recording studio, if you will, for Taking Stock, episode 31. A couple things have happened. Temperatures are on the rise, but the stocks are dipping the last 3 days.
Not so much on the rise.
Market.
Yeah, we've had a bit of drama here in the last. Really started Wednesday. Wednesday was a good day, but Thursday, Friday were not good, and Monday was just downright ugly. So. Here's the problem. The R word came out again. Recession, right? So, as soon as you throw that R word out there, and everybody loses their minds. And we had a great gross domestic product number. It was 2.8%. So the economy was chugging along in the second quarter of 2024, and so that was a good thing, and that was received from a positive standpoint. But then the Fed met on Tuesday and Thursday of last week, and the expectation, everybody just wants that rate cut. Everybody wants a rate cut, and they didn't get it, so they weren't happy about that. That
plummet.
A little bit. That kind of got it started, and then you had an unemployment report that was less than expected, we talk about this all the time.
Now, wait a minute. Hold on a second. The unemployment report wasn't as good as expected.
Yeah.
Okay.
Correct.
Because less than expected is like, I want to make sure we don't interpret that as the numbers were lower. No, the number of unemployed was a little higher than that.
Yeah, I did not say that well. This report was actually, the number of jobs created in the last month, and I think they were looking for an increase of about 177,000 jobs, which is still a nice increase, right around that 200,000, but it came in at 140-something, 150,000 instead. Well, that got the market going, and then you start to we're heading into a slowdown, and start talking about the Fed is too late on starting to lower rates, and now we're talking about a surprise drop, or a decrease in interest rates by the Fed, and so it just fed on itself. And as you mentioned right before we started talking here, it's the technology sector that's leading the way down. That's where the vast majority of returns were in the last 12 months or 18 months, and they're leading the way down. But there really was nowhere to hide, especially Friday and Monday. Pick something, and it was down. I mean, you talk cryptocurrency, oil, or not oil, but gold, and international markets, and domestic markets, and bonds were down. It was just one of those days where it was clearly people panicking, or what started out is probably people trying to lock in profits because they don't want to lose what they had, and that fed into now people are panicking.
Now you're touching on what I was thinking about, and you weren't supposed to go as far as you just did, because I was gonna lead in and feed you with, what, Art, you were dead on. It's the tech stock thing, but you covered that.
Okay.
But I'll still say it anyway. You were dead on. We've been talking about this for the last couple of episodes. In fact, the last 3 episodes we've touched on, where the tech stocks were. And, of course, they're going to adjust. The tech stock, you don't want to lock in on, hey, tech's where to be, because the techs will come back they'll level out or they'll drop a little bit, and that's exactly what we've seen, leading the way in a little bit of a downturn. But you touched on the thing. So the question is this: is that what it is? It's a taking profits is the sell-off right there. Is that what's happening? Or?
I would say, number one, that's probably the vast majority of where it started.
Yeah.
Was people, okay, I have some really nice profits here. I don't like this employment number. I don't like the fact that the Fed hasn't lowered rates yet, and so this starts. But then we kind of talked about this another thing. It started to feed on itself.
Right.
When you have a Friday that's down 2%, and then you have a Monday that's down 3%. I mean, that's two ugly days. Okay, I mean, yesterday the Dow Jones was down 1,000 points. Okay, now 1,000 points isn't what it was a few years ago, but it's still 1,000 points, and the S&P being down 3%. That's no fun. Let's be clear about that. Yeah. And the other thing was,
I wasn't happy with the S&P number just personally.
Yeah, no one. I mean, don't get me wrong. No one likes to see their portfolios go down, right? But we've talked a number of times. There is a such thing as too far, too fast. Okay, and at the beginning of this year we did some projections, and I said 5,400. Well, there's a reason I said 5,400, right? That's interest rates, or where I think interest rates are going to be, and that's what we think the earnings numbers are going to be. So there's some gray area in there, but we went through 5,700 up into 5,700 pretty quick.
Right.
And there wasn't, interest rates hadn't changed that much, earnings projections hadn't changed that much. Everyone was starting to place their bets that we were going to start to see some rate cuts. Well, we're not getting the rate cuts like they want them, so now everyone's getting scared, and they're taking profits, and then those who see the market drop, on Friday 2%, guess what? On Monday, now we're down 3%, right? So, and the other problem is Japan, for us it would be Sunday night, but Monday morning, Japan dropped 12%. The night before the U.S. market opened. So
I was hearing some things and wanted to ask you about. I'm glad you brought that up, because that had an impact. I guess that was the overnight, it was their Monday, and we weren't Monday yet, so it impacted our Monday market. Was what was going on in Japan. So what is happening in Japan? What the heck is going on?
Well,
there?
Japan actually raised interest rates late last week, so wasn't taken favorably.
Okay.
So, and then you start.
Well, that explains it, Lucy.
I mean, it's always something, right? It's something, and you always say, when you get comfortable, it's time to get uncomfortable. So if you're like, boy, we're really feeling good, everything, it's like, you might want to take a look at this. We're getting, and we always talk about fear and greed, right? So
I'm supposed to remember that.
Yeah, as the market moves up,
what drives the market? Fear and greed.
Well, people fear that they're going to miss out on something, and greed because they want more, right? So, and then in this case, and then it flips to the other side is, greed, I'm going to take my profits, and fear, I don't want to lose my profits. So that's how it kind of starts to feed on itself. But
which, by the way, if people don't want to miss out on something, hey, quick one if you're listening now, the market is down a little bit, buy now.
Yeah,
This is your opportunity. If you've been waiting, don't wait any longer. Buy now. That's Chuck Gibson saying that, not Art Jarvis. He can chime in if he likes.
Yeah, I mean, this is one person's opinion, but stocks are on sale today.
Right. Yeah.
Stock market as we speak here on Tuesday, August 6th?
Yes, sir.
Yeah, market's up almost 2%. So guess what? We lost 3% yesterday, and we're up 2% today. So you
should have bought yesterday.
Well, we'll see. Yeah, time will tell. But I mean, stocks are on sale now. There are times, and I'll always go back to the Great Recession back in 2008, 2009. There was a really good reason that the markets were dropping. Right, we were a mess from an economic standpoint and things like that. We're not. I'll say it again. We're not in a mess right now. I mean, things aren't. You can always find something to complain about or be negative about in the market. There's always something. I always say, I'll give you 12 reasons to buy, I'll give you 12 reasons not to buy, right? You got to figure out which ones you're going to pay attention to. Right. But, it's right now, and this will be the the theme for this episode, I think, is, pay attention to the trends, pay attention to the numbers. We talk about that all the time. Was the employment number what we wanted it to be or what they expected it to be? No. Was it terrible? No, it wasn't. We're still cranking out 100 and something thousand jobs per month. Have things slowed down a little bit? Most certainly. But, you can't, this economy can't crank out 300,000 jobs every single month, right?
I wouldn't think so.
No, you run out of people to work.
Well, I was going to say, and on that note, Art, go back 5 minutes ago where you were talking about that was the thing with employment. Well, it wasn't really employment. It was potential employment. Jobs created, 145,000 versus the 177 or 200,000, whatever they were aiming for. You can't fill the jobs that are available.
Right.
So why is that even a negative note?
Because it's, people focus on the number of the day. Okay.
I hear you.
And that, it was supposed to be this, it wasn't this, it was less, and not only was it less than what we were expecting, but it's less than what it has been in recent months.
Right.
Well, if all of a sudden the number turns negative, okay, we might have a problem here. But if we're still cranking out 150,000 jobs a month, I'm still okay with that.
Yeah.
And and you couple that with not only we were not that long ago, a couple months ago, we were at 4.75%. Actually, just a little bit before that, we were at 5% on the 10-year interest rate. Well, we dropped all the way down to 3.75 here last week. So, number one, you've got lower interest rates, which should be a positive. You have increasing earnings projections. That we're right smack dab, or we're 75% of our way through the earnings releases for the second quarter. 78% of the companies have reported positive earnings surprises, and the normal earnings surprise is somewhere around what's called 3.3%. Right now, the positive earnings surprises this past quarter have been closer to 5%. So not only are we getting a nice dose of positive surprises, we're also they're actually a little bit better than what we would see historically. Okay, so lower interest rates, increasing earnings, that's not a bad thing, right? Consumer still seems to be in there. Like I say, consumer still seems to be in it to win it. So that's a very, very long way of putting out. This is a complete different story than like a 2008, 2009. We're dropping. It's fear, and they're not wanting to lose what they have, and it's dropping. In my opinion, it's dropping for not all the wrong reasons, but what happened on Thursday, Friday, and Monday were not warranted based on what was going on in the world.
With the numbers, with the trends in the marketplace, that wasn't warranted. Mm-hmm. But so I told you I was going to stir it up before we went online. So I'm going to stir it up, and you actually mentioned one thing, and I said, well, not necessarily that, but politics. Yeah. So if the trends and the numbers don't warrant what we saw happen in the market, Thursday, Friday, and Monday, then where does what's happening, we impact the global market here in the USA, and the global market impacts the USA marketplace. But the politics, the volatility of the political situation here with this, again, we've talked about it, and at the end of the day, we're going to see very little impact. That's what history tells us. Mm-hmm. But it's a presidential election year, and it has been wacky because we had, and that's just, it's almost
wacky. Wacky's the technical term.
Right.
Yes.
Yeah. I'm using my large vocabulary.
There you go.
So, I'm talking way above everybody. Wacky. No, well, when you start throwing in, there's this assassination attempt. There was a brutal showcase of what they called a debate, and in the aftermath of those two things,
the Democratic Party nominee changed.
Right.
There's an upheaval in the political landscape during a presidential election year.
Right.
So if it's not trends that warrant what happened Thursday, Friday, and Monday, and if it's not the numbers that warrant what happened Thursday, Friday, and Monday, where's the politics fit into that?
I think the biggest thing with politics right now is it's clear as mud, right? It's clear as chunky peanut butter.
We're using all the big words.
I know. Yeah, that's right. You don't expect a whole lot out of me, but I mean, it's uncertainty. There's the word, uncertainty.
Oh, now there you go. Now we're talking.
I'll pull one out of my one of the oldies but goodies on my back pocket. It's uncertainty.
The political landscape has revealed uncertainty.
Very much so. I mean, as it has been for the last whatever number of elections, it's a 50-50 split, right? And
okay.
so there's, so what happened on the Democratic side with President Biden stepping aside and Kamala Harris coming in, and she just announced her running mate this morning. I think Tom Walz, if I'm saying that correctly, governor from Minnesota, maybe. But I'm really up on it today. But so.
That's not your field of expertise. Don't worry about it.
The names. I'm not. Again, I'm a numbers guy.
It wasn't a surprise nominee.
Wasn't it?
Was it?
Well, I don't even know who he is.
It was among the names mentioned.
Well, I mean, to be honest, I don't know who he is. So,
I got nothing.
But I'll figure it out. But it's completely uncertain. The expectation, I think, at one point was, Joe Biden was going to step aside, and that would mean Trump was going to run away with it, right? And I think that expectation is waning at the moment. I think, to their credit, the Democrats, they're not stupid. They and I use that word again. I'll be in trouble today if you're saying stupid. But they hit
both parties have done this before.
Yeah.
Nobody's stupid or ignorant,
and as they should. I mean, I'm sure there was a certain time of waiting before Biden made his announcement to step aside, and that gave them time, in my opinion, to prepare. And Kamala Harris, hit the ground running, right? And they had a plan, and they had their message, and they're conveying that message. I think it was you 2 weeks ago. We're talking about stealing the headlines. They did a good job of stealing the headlines very quickly. So very long-winded way of answering your question is it's uncertainty, and the market does not like uncertainty, and that's where we're uncertain from a political standpoint. We're uncertain from not in my opinion, but from the market standpoint. We're uncertain from an economic standpoint. People are concerned once again that we're staring in the eyes of a recession, and it's not. And we spent a year and a half back in 2021, 22, probably beginning of 23, talking about we're going into a recession. It was a foregone conclusion. Well, guess what? It never happened. But here we are talking about it again, and not only are we talking about it, where the markets are dropping because of it. So, and that has a lot to do with the media and things like that, obviously.
Oh boy, don't throw that in. Do not throw media into the mix. Fear and greed drives the market, but
yep.
Well, so I think in summary, and I'm never going to blame you for taking a long path.
Okay.
To get there. There's something to be said for going through the details of whatever we're talking about in response to a question. But I'm going to say this, in summary of what you just talked about, the ultimately uncertainty. The question was, if it's not the trends and the numbers that warranted, the shift in the market that we saw Thursday, Friday, and Monday, the downward shift of the market, then is it the politics? And the answer, in summary, was yes, it is.
Part of it,
and because of the uncertainty that's coming from whatever, and whether you support this candidate or that candidate or this party or that party, regardless of which one you support, whoever they are, in either one of those parties, they've done this before. It's strategy, it's planning. And yes, I did, in fact, on the last episode 2 weeks ago, talk about, stealing the headlines. If one party is gaining momentum, then absolutely in this world that we live in today, this is where that media role comes in. Right. Because the headlines come from the media at the end of the day. And so you've got to get the attention of the media back away from the other candidate, because otherwise he's piling up votes, he or she.
100%. We live in a world of instantaneous news.
I can't believe you said that.
Yeah. You getting ready to say that, or
no.
You're shocked by that?
Well, for everybody that's listening, instantaneous is not a word.
Oh, that's right.
Anyway.
Yes, that's right. We've had this discussion.
Yeah. So, anyway.
Yeah. But
so let's go back and start over again right there.
Okay. What's the other word I want to use?
Instant or instantly?
We live in a world of instant news. There you go. See, I told you I flunked English. But anyway, what was I going to say? Anyway, no.
We live in a world of instant news.
Instant news, and sometimes it's even correct. I mean, it's everyone is in such a hurry to deliver information. Sometimes we're not getting the correct information in the first round, right? So that causes volatility. But yeah, it's just once again, it's just people. It's fear, and it's just feeding on itself.
Right.
It's just and in this case, in my opinion. Now, don't get me wrong. We've gone from basically 5,700 on the S&P 500. We went below 5,200, and we're at 5,273 today. So we've made back 100 points or so. But I can't tell you that the market psychology isn't going to drive us down to 5,000. So who says maybe we lose another 4 or 5% before everybody calms down. So, and that's kind of where I am right now. Is it going to get worse, or are we going to settle here? But
you are, and always have been for these years that you've been doing this. The numbers and the trends.
That's right.
And you're looking out at, you're seeing what the numbers have been, you're seeing what the trends are, revealing coming forward. It's not guesswork. Here's the question for you. So, fear and greed, and right now, a downturn in the market, we have to attribute it to some level of fear, all right, for whatever reason. And you're saying, you know what, it wasn't warranted. The trends are looking favorable. The numbers are looking favorable. What was it? The earnings numbers, are looking favorable. So everything is favorable and doesn't warrant this fear. So if there's a mistake being made, what's the mistake, and what does Art Jarvis tell the financial world, the financial marketplace, to because you used the word a second ago, calm down. Right. Before it calms down, or while we're waiting for it to calm. Why wait? Let's say right now, hey listeners, don't join in the fear brigade. Calm down. What's the mistake people are making right now?
They're just, I think you just said it. They're not being calm, right?
That's the fear factor, right?
It's the fear factor, and it's you kind of. I thought you were going to say this exact point, but so let's say we've dropped 10%.
Okay.
We'll just call it 10%.
I don't want to, but okay.
Okay. Well, we dropped 10% from the top. Well, we're now buying stocks at a 10% discount from where we were. Okay, maybe not 10% from where they should be, but so you're sitting here at 5,200. Do I sit there and try and wait to see if we get down to 5,000 before we start making? No, take the discount. If it drops a little bit more, okay, or there's a few strategies in there that you can use, but it's the same thing on the upside. There's a saying, pigs get fat and hogs get slaughtered, right? If the market's going up and you're trying to hit the top, no, and I'll say this to you. If you go back to the beginning of 2023 to where we are today, portfolios are still up 20 to 30%. That's a good move. That's in spite of what we've had here. Now, the portfolios don't look as good as they did a week ago, but things are good, and I'll still sit here and pound the table that what I'm looking at doesn't say we're heading into a recession. Okay? But as soon as someone uses that R word, it's off. We're off and running. It's for the last 2-3 years. Every time, that's when you see those 1,000-point days on the Dow. Is someone use that recession word and everybody panics.
Yeah.
And one of my favorite lines from It's a Wonderful Life is when they're running on the banks, and he says, people are panicking, but Mr. Potter is buying, right? It's a good point. I wouldn't tell everybody to be Mr. Potter, but it's a good strategy. If everybody else is panicking, if everybody else is on this side of the ship, I want to be on the other. I want to be a contrarian. I want to be on the other side of the ship, as long as the economic numbers and things like that support that decision.
Right.
So again, we've said this many times. Stick with the plan, unless there's a really good reason to change the plan. And very, very seldom is there, you can tweak things. When we were up in 5,700, we took some profits and,
Well, so you touched on, it's always stick to the plan, like you just said a couple seconds ago.
Right.
And sorry for the interruption.
No.
But my point was, you said, stick to the plan, but hey, when it gets to 5,700, maybe take a couple steps, like you said, take a couple of profits, move some things around, go from there. Now,
yeah. So you had to acknowledge at 5,700 we were getting a little top heavy. So take some profits, and that doesn't necessarily mean changing the plan, but that doesn't mean you can't take some of the profits, especially out of, like, let's say, the technology sector, which was just way ahead of itself, and then move that down to something more conservative. Well, and that has helped the portfolios here over the last few days not to drop as much as the market has dropped. They dropped, but they didn't drop. But now here's the opportunity. Number one, any new cash that's come into the portfolios here within the last couple months or whatever, that's an opportunity to move some of that money into something a little further up the risk curve, but also some of that money that we moved down and took some profits in, that's a chance for us to take that and maybe move it back up the risk curve a little bit. So, I always say, with chaos comes opportunity. With volatility comes opportunity.
Yeah.
So, and I think that's where we are right now.
Well, I love when you label yourself a contrarian. So Mr. Potter,
yes,
you go ahead and keep buying.
That's right.
And all of you Mr. Potters out there, you don't have to be Mr. Potter from It's a Wonderful Life, but seize the opportunities.
Right.
And as Art has told us today, as we're wrapping this up, as Art has told us today, hey, stocks are on sale.
That's right.
Right now.
Nothing goes up in a straight line. Okay. Well, maybe something does. I can't think of what it is.
Let's use that other old cliche. What goes up must come down. So don't panic. It went up, and it has to come down.
Right. It makes for a healthy market. Okay. Adjusting. So, if we were too high, in my opinion, and we've pulled back 5 to 10%. That's what's known as a healthy, normal pullback. It really is, especially considering the fact that now we have lower interest rates and better earnings and things like that. So, yeah, it's from a historical standpoint, that is someone waving a flag saying buy. So, and that's what I'm going to do.
Buy, B-U-Y.
B-U-Y.
Well, and then so now, as we've reached the final seconds of episode number 31, we're going to say buy, B-Y-E.
There you go.
But I'm also going to say, Art, thank you so much. You talked us all off the edge, off the cliff, off the ledge outside the, what was that? You were talking about the glacier, the 10-story?
Yeah.
Well, so if we were on the 10th-story ledge, you at least got us back to the ground floor safely today.
There you go.
And let people know there's an opportunity to buy B-U-Y.
Yes.
And so thank you for bringing us back some level of calm in this chaos.
Yeah, well, my pleasure. And as I say, I get as much out of this as hopefully other people get out of it. It's good to talk through it and talk and say some of these things out loud. So, and we'll be talking to a lot of clients here over the next few days, and what the message I just gave to here is the exact same message that we're going to talk to.
Well, we were happy to give you a practice session.
Yeah, I appreciate that.
Prepare for those conversations with your clients. But again, all kidding aside, thank you so much. We'll be back in 2 weeks. If you'll join us once again to continue taking stock, and we'll have episode number 32.
Looking forward to it. I'm sure there'll be something exciting to talk about.
Thanks again.
All right, thank you.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.